Welcome to Fear and Greed Summer Investing Series, brought to you by Vanta, specialists in compliance-led growth. I'm Sean Aylmer. For investors, for homeowners, for businesses, pretty much everyone, it's important to have an idea of where the Australian economy is headed. Fear and Greed's resident economist is Stephen Koukoulas. You'll find him at thekouk.com or on X using the handle thekouk. That's THEKOUK. Stephen, welcome to Fear and Greed this wonderful new year.
And a happy new year. Let's hope 2025 is an absolute corker for investors, the economy, low inflation, and this bird that's squeaking behind me.
Yeah, indeed. Well, the bird sounds pretty happy. Tell me what's going to happen on inflation/interest rates this year.
Yeah, look, I think, we ended 2024 with, mixed news. The economy was weak. We ended the year with that stunning unemployment number, back below 4% for the unemployment rate. But, and it's a really important but, we also saw the economy muddling along, I think it's fair to say. GDP growth under 1% in annual terms, wages growth coming off a bit. But there were also some green shoots, if I use that cliche, in things like building approvals, starting to edge up from admittedly a low base, but maybe 2025 is the year that we get a bit of a supply side response on construction, so that's better. The consumer looking okay, so that we put all this into the melting pot to, what's the RBA going to do with interest rates? Where is inflation going? And I think that we've still got this proposition that the subdued growth, despite those good labour numbers, is going to see inflation continue to tick down and down and down. And that with that, interest rates will tick down and down and down. So before we get too excited about, which month will they cut and how many cuts will there be, I think it's just going to be this issue, as Michelle Bullock said in her presentation at the end of last year, that it really depends on the inflation/unemployment numbers. If that next inflation number that comes out at the end of January is low, they could start in February, and probably every alternate meeting they might go 25.
Okay, so your best bet though, February or later? Yeah,
I'd say sooner, because the economy is still subdued, and we've got to celebrate low unemployment. It's a mighty good thing. I was cheering that we've got low unemployment. Let's lock it in. So by the end of the year, we probably have 4 rate cuts, would be my semi-educated guess. So from 4.35 to 3.35, not much more than that, because I don't think we need more than that. And because of that, inflation ticking down, both headline, trimmed mean, and the timing of the election might be a bit of a thorn in the side of what we see and what we do. And in fact, from a fiscal policy perspective, it could be important too.
Okay, so that means hopefully home loan rates, high 5s, low 6s by the end of the year. What about house prices? What do you think will happen there this year?
Yeah, well, then we ended the year with that trend to weakness coming through. Sydney joined the ranks of Melbourne, Hobart, Canberra and Darwin, which were already falling, again, not majorly, but falling, a couple of tenths of a percent per month. Now, Sydney's moved into that negative territory. Perth, Adelaide, Brisbane, the strong cities, have also slowed down. So they're still positive but slowing down. So you mix that all up too, and you say, well, house prices probably on the back of a fall in the immigration intake, on the back of some new listings coming through in most of the cities, not all of them, but the SQM research has some really good data on listings. And it's sort of confirming that we've got this supply and demand moving back into kilter. House prices, look, I wouldn't die in a ditch in it, but probably just flat. We were surprised how strong they were, in the lead out of the pandemic when we had rate hikes. I think even if we get rate cuts, it's sort of going to be more a financial relief for those with a mortgage rather than rekindling a house price boom. So nationwide, I'll call it flat.
Okay, last part, fiscal policy. We've got an election coming up. You've already mentioned that. Great time for governments and oppositions to make big promises on spending. Where do you think we'll end up this year with government spending?
Do you know what? I think I live in hope, but I think we're going to see quite or semi-responsible electioneering. As I said, I live in hope that we'll sort of see, and I think Jim Chalmers gets, and I think the coalition get it too, that at a time when you're just starting or probably starting an interest rate cutting cycle, when we know that government demand is a record share of the economy, the National Accounts figures for the September quarter at the end of December or in early December confirmed that public sector spending is sort of at a record share of the economy. A little bit of prudence on the budget side would be a good thing. Now, they're still going to make promises. My hunch is that they won't be hellishly expensive. They'll be appealing to the voters, but they're not going to be that multiple billions of dollars that sees the budget blow out and cause the Reserve Bank grief. So I'd like to think that this might well be the one with an interest rates also permeating the election campaign, even though, of course, political parties don't control interest rates, but people vote on the backs of them. They just don't want to be seen the ones saying, oh, you're promising this massive fiscal stimulus and you're going to be the reason why the RBA is not going to cut if you win. And I think they get it. And that's an encouraging sign too. When we're going to be having a budget deficit over the next couple of years. Let's not make it too big.
Stephen, thanks for joining us.
Thanks, Sean.
That was economist Stephen Koukoulas. You'll find him at thekook.com or on X using the handle thekook. This is Fear and Greed's Summer Investing Series brought to you by Vanta. Vanta automates compliance for frameworks like ISO 27001, SOC 2, CPS 234 and Essential 8, saving time and money while building trust. Join over 8,000 companies like Atlassian, Dovetail and FireAnt managing real-time risk. Get $1,000 off at vanta.com/fearandgreed. I'm Sean Aylmer. Enjoy your day.